characterization of gains and losses. Let's talk about how we got to characterization. Remember that when it comes to property transactions, there's 3 steps. Step 1 is to determine the realized gain or loss. That's the amount realized minus the adjusted basis. The next step is to take that realized gain or loss and determine if it's recognized. The general rule is that realized gains or losses are recognized unless the non-recognition rule applies. We talked about non-recognition rules such as like-kind exchanges, involuntary conversions, and there's so many others in the tax law. The third and final step, after you have a recognized gain or loss, which is a reported gain or loss, you then have to characterize that gain or loss. So we're looking at different types of characterizations. Now ultimately, when at the end of the day, there's really 2 types of characterizations: ordinary characterization and capital characterization. Now capital is broken between long-term and short-term. That's a very important aspect. We're going to make that distinction when we go through our videos, but keep that in mind. You're also going to be learning about what's the preferred situation when you have a gain versus what's the preferred characterization situation when you have a loss. Now, one thing I want to stress, you're going to see that there's a lot of rules and a lot of steps to follow. I love to use checklists. The best way to think about it is like a roadmap, or like you're baking something, or you're making something like food. So I actually have a little description here, a little visual to help you. We're actually going to make a cake together. So we've got our mixing bowl, and we've got some various items. We're going to start with putting some flour, some sugar, some baking powder, a little bit of salt. We're going to go ahead and we're going to put that into our mixing bowl. So let me show you putting that in right now. All right, so we've done that. Put that up. Now what we're going to do is I've got some melted butter. Got some melted butter here. We're going to go ahead and put that in. Put in that melted butter. Ooh, look at that. Yes, very nice. So we got our melted butter. We've also got some water. Got some water in there. Put some water in there. And finally, we've got an egg. So for the egg, I'm going to crack that egg. Got an egg right here. I'm going to crack it. And I'm going to put it right into our mixing bowl. And just like that, we've got basic ingredients for a cake. And we're going to go ahead and we're going to follow those steps, right? Step 1, step 2, step 3, step 4. We're going to mix those things together. We're going to mix up those items, just like you're baking a cake. That's what you're doing. So when you're going through these rules for determining what the characterization of the gain or loss is, after you've recognized that gain or loss, you're going to follow the rules just as such. And I'm going to teach you a bunch of steps. It's very important that you follow those steps. You're going to go all the way through, and you're going to learn what a capital asset is. You're going to go through, and you're going to talk about different sub-characterizations like Section 1231, Section 1245, Section 1250. Also look at capital gain, capital loss mechanics. So we mix that up. We mix it up really good. We're going to then put this down. We're going to let it bake, right? That's obviously a direction in itself. We're going to let that bake. And let me put down my whisk. We're going to let that bake. We're going to let that sit. And soon enough, we're going to have our cake, right? We're going to have a nice cake. So additionally, when we're looking at characterizations, another thing that I want to talk about, and this is a huge topic, any aspect of tax, it is the most taxpayer-friendly rule in the entire tax law. I love this rule. It's called Section 1231, Gains and Losses. And that's actually what it's called. There's few times when the actual title is the actual section itself. It's called a Section 1231, Gain or Loss. You're going to learn all about those things and the rules, just like the steps of baking a cake. You're going to learn all those rules. Very, very important. We're going to be using an approach, a checklist type approach, a map type approach to go through so you can master this topic. And you will master it. It's very, very important that you understand this. It's very important for tax practice. But the thing I'm going to talk about now, keep this in mind, okay? Keep this in mind. And that is, again, that Section 1231, that rule is the most favorable of all the taxpayer-friendly rules. So it's the most favorable for taxpayers in the entire tax law. Most rules favor the IRS, the government. But this rule, it easily favors taxpayers. And the reason why is, as you're going to learn, when it comes to gains, if we have a gain of all the possibilities, ultimately, we prefer that gain be considered a long-term capital gain of all our possible characterization outcomes. And the reason why is because long-term capital gains historically, and at the time of this video, have had lower tax rates than ordinary gains. That's the main reason. There's other reasons as well, and you're going to learn about those, but that's the main reason, okay? And if it's a loss, if you have a loss, if you have all, if you're a taxpayer and you have all the different possibilities in the world in terms of our ultimate characterizations, you want it to be an ordinary loss. And the reason why you want an ordinary loss is because two reasons. First is because you're offsetting ordinary income, which is taxed at a higher rate than long-term capital would be, or capital items would be, as I mentioned. And we're going to learn that short-term capital gains are taxed at ordinary rates generally. So ordinary rates, an ordinary loss will offset ordinary income, where the ordinary income would be at a higher rate. So you're getting more bang for your buck, if you will. The second reason is that ordinary losses have much less limitation than capital losses do. So keep that in mind. So again, the reason why Section 1231 is the most favorable rule for taxpayers, most taxpayer-friendly rule in the entire tax law, is because if you have a gain in a situation, you're characterizing it, and Section 1231 applies, it's long-term capital. And you're going to do some netting and whatnot, some of these steps that you're going to learn, kind of like what we just did with these steps, kind of like baking a cake. And you're going to end up seeing how it works out. It's kind of confusing at first, but once you get the hang of it, you'll be fine. So if you have net gains, if you have a gain situation, you're a taxpayer in a gain situation, you're Section 1231, you have a gain situation, you treat those as long-term capital, which is good for you. If you have a net loss situation or losses in Section 1231, you treat it as an ordinary loss, which is good for you. So it's like you're flipping a coin. Heads, for gains, you got long-term capital. Good. Tails, losses, you've got ordinary. Good. You are in a good situation. Sometimes people refer to this as taxpayer nirvana because it's the best of both worlds, right? You've got one world of gains, one world of losses. You get the best of both worlds. I like to think of it, we just made a cake, right? Like having your cake and eating it too, or eating your cake and having it too, however you learn that, right? Whatever it is. And just like that, guess what? Our cake that we made earlier, it's done. Ding! And we have a cake. We have a beautiful little cake here. Wait, this isn't a cake. This is a muffin, right? This is a muffin. This is not the same thing as a cake. I'm going to try just to make sure. That is a muffin. I know. We got our cake. This is the cake, right? So we're going to have our cake and we're going to eat it too. Very good cake. So with that, make sure you have a great time learning this. This is a very difficult topic when you first learn about it. There's a lot of rules. But remember, just like baking a cake, stick to the steps, go through, and you will master this subject. I promise you. You will master it. It's not that difficult. So with that, go ahead and go to work, and I'm going to have another piece of this cake.